been asked to prepare two things. Okay, number one, income and expenditure account, and number two, balance sheet. And that topic, preparation of income and expenditure account, we have done previously, yesterday and today too. But right now I am taking also solving the problem on the income and expenditure account. At the time will not, there is a paucity of time, and I will take up only the income and expenditure account today, and tomorrow in the morning hours I will take up the preparation of balance sheet. Okay. Now the problem is a very simple problem, and it is more or less an equal problem as that of what has been done just 2 minutes back. It is a receipts and payments account. Only the year has been changed. It is 1998 to 2019. Okay, 2019. The receipts and payments account has been given, and these are the different heads of payments. I know what is the difference between payments and income. I am not repeating, and I am taking up the payments over here, and also and the income over here. Sorry, expenses over here. Now you see salaries 1,500. So it has been salaries 1,500, and it is in the expense side 1,500. The information source, friends, before solving the problem, no, my suggestion is that you should always go through the additional information first. Okay, because it will help you to solve the problem, and whenever you will go on solving the problem, you will simultaneously consider the adjustment tables. Now, of the subscription received 500 is for 2018, and will be 600 for 2020, but for 100 is due for for 2019. So whenever we will take up the treatment of subscription, we will consider it. Now, the total sum received in the interest is to be calculated, is to be transferred to capital account. Very good. It is given over here, and we will consider it when completing the income side. Salary is remaining due to be paid rupees 300. So 300 should be considered for treating salary, and interest is receivable 500. So when the question of interest is there, we will consider this. Now the other things is that club had the following other assets on the opening day of the year. So it is very important information, and with this information we have to prepare the opening balance sheet, and sports books and books, investment. Okay, and this part I will take up tomorrow. Okay, right now I am taking up this. Now salary 1,500. Salary remaining due to be paid. It is how much? It is 300. The salary and outstanding 300. And this outstanding salary is my liability. And whenever we will be preparing, I am telling you today, whenever we will be preparing our balance sheet, see, I am preparing the balance sheet for the last date of the balance sheet. Okay, balance sheet as on 31st 12/19. So this outstanding, I am making only the adjustments. Okay, because tomorrow I will grab this part. Okay. The outstanding of 60,000 will be the liability. So it will come in the liability side. Outstanding salaries. So it will be in the closing balance sheet. It is the outstanding liability. Clear? And now it is due, but it has not been paid. So it is our liability, and the last day of the in the balance sheet, the last day it will stand in the liability side of the balance sheet. Clear? Now, then comes electric charges. Electric charges will be 300. Okay. It is given over, written over here. Then sports expenses. How much? Sports expenses 1,000. Okay. Clear? Sports expenses. Then comes books purchase. Books is an asset, and it will come in the asset side of the balance sheet. So we will write it over there. But with this book, there is some opening balance that I will take up tomorrow. Clear? Now books. Now sports goods purchase. Sports goods is capital expenditure. It will not come. It should not be treated as an expenditure. So it is capital in nature. We will write sports goods. It will come in the balance sheet. That thing I have told you. Right now I am showing you how they are coming in the balance sheet. With the opening balance sheet, you have to tell me the closing balance sheet too. Then sports goods. And then come miscellaneous expenses will be 700. It has been written over here. Miscellaneous expenses. Clear? Then comes sports expenses. I have written. Okay, fine. And now miscellaneous expenses that is 700. Charity show expenses rupees 2000. Okay, so charity show expenses rupees 2000. And then comes investment. Investment is an asset, and it will come in the asset side of the balance sheet. Closing investment. Okay. Just I have told you that the payments has got two nature. One is revenue in nature, and the other one is capital in nature. Revenue in nature has been shown as an expenditure and has been treated over here, and the payments which are made, which are of capital in nature, that should be treated as an asset. As books are an asset, post equipment is an asset, post books is an asset, and investment assets, and all have been given mark over here in the closing balance sheet. Here. Okay. Then comes the receipt side. Opening balance is the opening cash. It should not come in the then the closing balance of cash. It is the cash balance. Okay. Cash in hand at the date. It will come over here. Cash in hand. It will come in the closing balance sheet. So the closing balance sheet will contain this information along with the other information given over here. Okay. Right now, you just bear it in mind that the opening balance sheet should have this information, and the closing balance sheet must contain this information and also the addition to the total assets. Okay. Then comes opening balance of opening balance. Opening balance of cash. It will come in the opening balance sheet. Okay, it will come in the opening balance sheet. Now subscription 20,000. Clear? Subscription is an income and it has been shown over here. But some information has been given. What are the information? We are considering the year 2019. Okay, and of the subscription received, rupees 5,000 is for 2018. So it relates to the previous year. It is not our income of this year. So that amount has been deducted. Okay, clear? That amount has been deducted. And this subscription, the area subscription, which was in 2018, will be treated while preparing the balance sheet, because opening balance sheet. In the opening balance sheet, it will come. Now, rupees 600 for 2020. So you have received rupees 600 for the coming year. So it is not the income of this year. It should be deducted. And this amount will come in the closing side of the, in the closing balance sheet. Okay. As a liability side. Advance subscription. So advance subscription is your liability because you have received the income, you have received the amount. But the period has not been covered. Okay, and rupees 100 is due for 1990. It has been added, and it will come in the asset side. Okay, accrued subscription in the asset side. Clear? So these would be the treatment in our closing balance sheet. Clear? Then comes donation. Regarding donation, any information given? No information given with regards to donation. I have told you, friend, repeatedly, donation may be revenue in nature, may be capital in nature. Clear? As nothing has been stated, we may consider this as revenue. Okay? Revenue. And if we consider it as revenue, then it will come over here by donation. By donation. What is the amount? 5,000. Clear? But mind it, here the accounting practices give you some privilege, some special privilege with regards to assumption. Now you think, what is the amount of donation? Donation is 5,000. Okay, what is the amount of subscription? 20,000. The donation is more or less a considerable part. Okay, how much? 5,000. Rather 25% of the subscription. So bigger, if it appears to a comparatively as considerable amount, it is better to treat donation as capital expenditure, capital earning. Okay, and if you go to the balance sheet, in the balance sheet it will come in the asset side, in the liability side, donation. Yeah, what do? We treat this donation in the capital fund. Okay, so we add it to capital fund. I will consider it tomorrow. So here we are not going because it is capitalized. Capitalized not stated, but we assume that it is a capital earning. Okay, entrance fee 1000. Regarding entrance fee should come over here by entrance fees. But what is written over here? The total sum received on entrance fees to be transferred to the capital fund. So 1000 donation, sorry, interest we received has been made capitalized. In our previous problem, 60% was capitalized and only 40% came over there. So here the 100% is to be capitalized. So when the entrance fee of 1000 is being capitalized, the donation of 5000 should be capitalized too. So we are making an assumption with respect to donation. We are making an assumption and treating it as capitalized income. And interest fee, it is clearly stated that it is a capital fund. Okay. Now interest 100. Now the interest is receivable rupees 500. Interest is receivable. Receivable means you are expected to receive the interest of 500. But how much you have received? You have received 100. How much you have not received? You have not received 400. So that is accrued. So 100 plus 400 equals to 500. And this what comes from 400 is your accrued income, and it will be accrued interest, and it will be your asset in the closing balance sheet. Here, closing balance sheet. Then charity is for a receipt. Charity receipt is a receipt, and it has been shown over there. Clear. Now, so we have more or less given the treatment of all the items given over here. Now, one thing I am letting you know, that charity show income is how much? 2,400, and charity show expenses how much? It is 2,000. Clear. So ultimately, what is the difference? You have gained you have gained of rupees. I wanted to lose 400. Now instead charity show receipt is over here, payments are over there. Clear. But instead of that, you may make another treatment. Okay, I am making that treatment. To make a charity show account, charity show account. Okay, here you write the receipts, here you write the payments. By charity show receipts 2,400 to charity show expenses 2,000. Okay. Now you have gained how much? Rupees 400 by profit on charity show. How much? 400. And that 400 you should transfer to income and expenditure. Okay. So it is the same thing. Here you have done 2,400, and here you have put 2,000. So what is the difference? 400 difference is carried. So instead of doing that, you will make a separate account. I would like to say that all the better students will always try to do that. Okay, and it should be shown in the working part. It is not stated, but it should be in the working note. In the working note, and working notes carry huge value in solving any accounting problem. So accounting is such a science. Social science is a man-made science. So it has multiplicity of the practices which differ from one place to another, one person to the other, one organization to the other. So whatever you do, you can make some logical assumption, and you should give the notes accordingly. Clear? As what you have to regarding where there are some doubts, you should take the notes. Regarding donation, what should you write? In the assumption, in the working notes, you should write, it has been assumed that the donation has been made capital. Donation is capital receipt and has gone accordingly to capital. Entrance fee clearly given. With other things, there is no question. Regarding the assets, nothing, no description has been stated. But whenever you are taking, considering the depreciation, And now, what is the period of depreciation? In that case, you should give the note. In our case, as we did that, it was clear that 10% depreciation. So it was charged straight. But whenever per annum is given, then we have to make necessary assumption. Considering when it is purchased, we do not know. We charge the depreciation on average for average period. Okay. So now the difference is the total of the credit side is 21,900, and it is the total of say debit side actually expenditure side 5,800. The difference is 16,100, and this 16,100 is the surplus, and it will go to the capital. Okay, to the balance sheet. Yeah. So friends, this is more or less the solution of this problem. Solution of this problem, only the income and expenditure.